guys, it's Stock Curry, and in today's video, I'm going to explain why I think the Fed just started a market correction. We're going to look into what was actually said, we're going to look at the technicals in the market, and I'm going to tell you what you can do to prepare for an upcoming correction. So let's get into it! Okay, so let's get into what actually happened in the markets today, because it was a wild ride. The futures started out green, and then when the markets opened up, they were red. And then when the actual market opened up, it started out green and then went big red again. Wild, wild day. So essentially what happened is going into the futures before the pre-markets actually opened on Tuesday, everything looked good. It looked like the Omicron thing was kind of just too much and we were just going to continue a rebound. It looked like things were going to turn out pretty good. Then before the pre-markets actually opened, there was a news article that came out of Europe essentially saying that inflation in Europe looks to be the highest it has ever been. It looks like inflation hit a record high in November. Now, this really scared the markets. And the reason is we are already seeing a slowdown in China. Now, if Europe also sees high inflation, that means we could also see a slowdown in Europe, and it's just going to trickle its way over to the United States. That is exactly what happened in 2008 during the financial crisis. The financial crisis started in Asia, then it made its way over to Europe, and eventually it made its way over to the United States. And we're seeing the same thing now with China slowing down, and now Europe is showing signs of high inflation, and that might cause the US to slow down as well. And so it causes a lot of concern for the possibility of a longer-term bear market throughout 2022. And so that's what initially caused the markets to drop in the pre-market. Now, then the markets recovered a lot from that. And we started out, it looks like we were going to go green during the day on Tuesday, or at the very least recover a lot of the losses. And then the Fed opened up their mouth. So the Fed chairman, Jerome Powell, ended up speaking to Congress today. And essentially what he said was, inflation is not transitory. It is here to stay. It is going faster than they expected. And as a result, they're going to have to be a little bit more aggressive in tackling this high inflation. And so what the Fed wants to do is, rather than end tapering by the middle of June of 2022, instead, they're now looking to end tapering a lot sooner than that. And of course, as soon as the tapering is done, then they can start raising interest rates. Now, this caused another round of panic in the markets. And we saw everything, the Dow, the S&P, the NASDAQ, all of it dropped by about 2% on Tuesday. Now, this is coming right on the heels of a prior 2% drop on Friday. So it's not looking good. I mean, we had a 2% drop on Friday due to fears over the new pandemic variant. And then we get a rebound on Monday as Congress comes out and says, don't worry about it, everything's good. This new variant is nothing to be concerned about right now. And then Tuesday, we get another 2% drop as the Fed comes out and says inflation's running really high and we need to raise interest rates a little bit faster than expected. Now, the question is, why did this cause a drop in the markets? Now, if you recall from a couple of days ago, I think it was my Monday video, I went through my prediction for the market and I essentially explained that pretty much the markets are pricing in perfection right now. They are extremely overbought, and any bit of bad news could cause the markets to drop. And that's what we're seeing. We saw the Omicron thing cause the markets to drop. Now we're seeing the Fed increasing their interest rates and increasing the rate of their tapering that's causing the markets to drop. Don't forget that we also have the government shutdown that is looming this Friday. And then on top of that, we have the debt limit that is looming in about 2.5 weeks on December 15th. So we have a lot of bad news that's just hitting all at once. Now, this is also butting up against a December, and keep in mind that December is historically one of the best months in the stock market. There's a term you might have heard of called a Santa rally, and essentially it just goes along with the fact that generally consumers will do a lot of extra spending in December, and that in turn is going to cause retail stocks especially to rise. Now, what is unique and different this year is we saw a drop in in-store sales on Black Friday. Now, that's nothing to be concerned about. That's been happening for years. But the real concern is that on Cyber Monday, we saw an 11% drop in online consumer spending. Now, that was really shocking. That was a big red flag to me. And I'm a little surprised that Monday's run-up was as high as it was, given the fact that we had an 11% drop in online spending from the prior year. So we not only saw a drop in in-store sales, we also saw a drop in online spending. That is just a big red flag of an overall slowdown in the economy, consumers not spending as much money. Maybe they don't have as much because they were laid off for a long time. Maybe they just don't want to spend as much because they're concerned that they might get laid off again or the economy might go down. Maybe they're just tight on their budgets because inflation is running so high and their rent has gone up, the cost of everything they're buying has gone up, and they just don't have as much money to spend on Christmas this year. And so overall, we have all this bad news that's coming out all at once, and the Fed coming out saying that they are going to start their tapering even faster. It just absolutely kickstarted a correction that was already building. And so it's not that the Fed necessarily caused a correction, but I think the Fed has now kickstarted it and got it going when up until today, it was a little uncertain if we were going to get a correction or not. I think now absolutely 100% we will. Okay, so now that I'm pretty certain that we are going to get a correction and that December is not going to be this great month that it normally is, what does that mean for you? How should you be playing it? Well, there's a couple of things that you can look at. First of all, if we do get a correction, pretty much all stocks are going to drop across the board. So in the short term, you might want to consider some hedges such as UVXY, VXX, SPXU, and SQQQ. Now, in addition to that, if you want to go a little bit more aggressive, you can also just straight up buy put options on things like QQQ, DIA, and SPY, essentially by put options on the indexes. Now, how long should you hold these hedges or your put options for? I think December 17th would be the ideal date. The reason is all of the uncertainty that we're getting in the markets right now that is causing the markets to go down should all be resolved after December 17th. If you think about it, that will be past the Fed's December meeting, so we'll already have that out of the way. In addition to that, we'll have the November inflation numbers come out. That'll be out of the way. On top of that, you're going to have the government shutdown issue resolved by then. Keep in mind that the Democrats want to extend the government spending through December 17th. And so that will be resolved by December 17th. And then on top of that, the debt limit crisis, which is coming up on December 15th, that will have passed. So I think all of the uncertainty and all of the doubts and all the fears that are causing the markets to go down right now should all be resolved by December 17th. So if you're going to do hedges, I would run them through December 17th. Okay, let's get into our stock and crypto picks. When I get to those, we're going to be talking about some very specific stocks and cryptos that you might want to consider buying that I think might actually go up from here even during a possible correction, as well as a few just to get on your radar to buy after they drop. So let's get into those. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks on YouTube. Every day I spend hours and hours and hours watching YouTube videos, and then I consolidate all of the stock picks from the top YouTubers and I put them together into a single video. I give you both the cliff notes on their stock picks as well as my analysis on their stock picks. Now, if anything I talk about today piques your interest, make sure you listen to who I say talked about it and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and follow the page so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. All right, before we get into our stock and crypto picks, I just want to remind you that I'm not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any assets. If you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $2,300, you can sign up for Webull using my link in the description below. When you sign up for Webull using my link in the description below and deposit just $1, Webull will send you 2 free stocks worth up to $2,300. All right, let's get into today's stock and crypto picks. Okay, before we get into the actual stock and crypto picks, I do want to do a little bit of technical analysis on the markets and show you why technically I think we're about to enter a correction. Now, first of all, taking a look at the SPY, which is an S&P 500 index fund, notice how we closed today below the 50-day EMA. On top of that, we also have the RSI dropping, and we have the MACD histogram continuing to drop as well. Now remember that the last time that we had the government shutdown and the debt limit fears looming, the SPY dropped down just below the 100-day EMA, and this was not even a correction. Now if that were to happen again, get down to about that level and not even correct, we're looking at this getting down to around $442 or about a 3% drop from here. Now if it does go to full correction, then we need to drop all the way down to the 200-day EMA, which is around $428. Now the QQQ, which is a NASDAQ ETF, is looking just a little bit better than the SPY, but still very similar. If you'll notice, about the only difference here is while we still do have the drop in the RSI and we have the drop in the MACD histogram, we do have a close that's above the 21-day EMA today. So the EMAs are actually a lot more bullish on the NASDAQ than they are on the S&P. However, with the MACD dropping and the RSI dropping, we could still see this drop as well. How low? Well, keep in mind that back when we had our government shutdown and debt limit fears, we got down to about halfway between the 100 and 200-day EMAs. If that were to happen again, we'd be looking at about $365, which would pretty much be a 10% drop from here. So that actually would be a full-on correction. So that's probably why we're seeing a little bit more strength here, but still this could drop down pretty far, at least 10% from here, if we do get a full correction. Okay, now let's take a look at cryptocurrencies. And while cryptocurrencies pulled back a little bit today, the one shining light was actually Shiba Inu. Multiple YouTubers talked about how even though the stock market was down, crypto was up. And one of the big winners was SHIB. Now, yesterday I talked about how if SHIB could close above all of the EMAs to form a golden cross on the MACD, that would be confirmation of a rebound. And it looks like that might happen. Now, be aware that a candle isn't a candle until the candle is finished. So SHIB could continue to drop on Wednesday and fall back below the 21-day EMA, which it's sitting at right now. But as of the recording of this video, it looks like there is a chance that we could get that golden cross on the MACD on either Wednesday or Thursday. And if that happens and we do get closes above the 21-day EMA Wednesday and Thursday, then we could see SHIB continuing to run up. So overall, SHIB is looking bullish on the technicals, but we don't quite yet have full confirmation of a rebound. Now, Keen and Grace also mentioned how there might be some more big news coming up based upon a very cryptic tweet that the official Shiba token Twitter account released. Now, personally, I think the cryptic tweet was just asking what's next, as in they don't really know, but others, such as Keen and Grace, think they know what's next and they just haven't announced it yet. Now, in some factual, no speculative news, Keen and Grace let us know that on Binance, there was more trading volume in Shiba Inu than there was in Bitcoin yesterday. And in fact, SHIB accounted for the highest volume on Binance. Further, SHIB trading is now live on Kraken, which is also causing upward pressure on the coin price. So altogether, this is all pretty much bullish for SHIB, although we don't quite have full confirmation of a rebound on the technicals yet. And now onto our stock picks, and first up is AAPL. This is Apple. Keen and Grace let us know that AAPL ran up over 3% on Tuesday, even as the overall market dropped by 2%. The reason was twofold. First, Apple will be releasing augmented reality glasses soon. These should be similar to the Microsoft HoloLens that has been in development for the past few years. And further, Apple announced that they expect to see record revenues in October. It is for those reasons that Keenan Grace continues to like AAPL as a pillar of his portfolio. Now, fundamentally, AAPL remains expensive with a PE ratio of 29. Technically, AAPL is overbought on the RSI at 71. On the other hand, AAPL has strong momentum right now. So I would expect AAPL to trade flat for a little while. If we get a correction, however, AAPL could see a significant drop. So if you don't already own solid companies like AAPL, you might want to consider slowly dollar cost averaging in to help balance out your portfolio and prevent the huge swings that you can often see when there's volatility in the markets like we've seen over the past few days. And next up is DKNG. This is DraftKings, and they're an online sports betting company. Chris Zane told his viewers to buy DKNG today. DKNG dropped below the strong support level of $35 on Tuesday, but it did recover most of those losses. Technically, DKNG remains a falling knife, but it is also maintaining the $35 support level. In addition, the RSI remains oversold and the MACD histogram is rising, which are all signs of a bottoming out. So while we do have a lot of signs that DKNG is bottoming out, we don't have confirmation of a rebound yet. You might want to wait for DKNG to form a golden cross in the MACD and for the candles to close above the 10-day EMA before buying in. What concerns me is the possibility that DKNG won't rebound and will actually continue going lower. I don't think that's going to happen, but it is a possibility. So there are two ways you could play this. One might be to buy in now and then set a stop loss at around $33. Another might be just to wait for confirmation of a rebound. Either way, I would be cautious with DKNG. While it is cheap, and this is a great price to buy in at for a long-term hold, we do have to be mindful of the fact that it remains a falling knife. And next up is GS. This is Goldman Sachs. Now, the Fed has admitted that inflation was not temporary, but is here to stay, and Stockmo likes GS and other banking stocks because these will do well during times of higher interest rates. As the Fed raises interest rates to curb inflation, banks will see a greater return on their loans and their profits will increase. Now, fundamentally, I completely agree with Stockmo, and I can also see that GS is really cheap right now. The PE ratio is all the way down to 6.38. But technically, GS continues to fall. The candles are below most of the EMAs, the RSI is dropping, and the MACD is dropping. It's really hard to say how low GS will go because GS has not fallen below the 100-day EMA since October of last year, the last time we had a correction. So GS is behaving like we are about to enter a correction. And if we do, GS normally does not bottom out until it is well below the 300-day EMA. So while GS is cheap fundamentally and now is a good price to buy in for a long-term hold, I am concerned that GS might continue to fall. If we get a correction, GS could fall as low as $300. So given the bullish fundamentals and the bearish technicals, I would just get GS on your watch list for now and wait to see what's going to happen. And next up is NIO. This is NIO, and they're a Chinese EV manufacturer. Both Stockmo and Chris Zane bought more NIO on Tuesday. Chris Zane said his position is now completely established and he will not be buying any more shares. Now technically, NIO continues to drop with the RSI dropping and the MACD dropping, but on the bullish side, the candles held the 200-day EMA. And we also have NIO Day coming up in a few weeks. So actually, NIO is neutral on the technicals. The RSI is near 50 and the MACD is near 0. It's impossible to say where NIO will go in the short term, but at these prices, I continue to like NIO for a long-term hold. And last up is PLTR. This is Palantir, and they're a data analytics company. Chris Zane said he is waiting for PLTR to drop below $20.50 before buying more shares. He did buy some PLTR on Tuesday, but he wants it to drop lower before buying more. Now technically PLTR is very similar to DKNG. The candles continue to hold strong support at $20, and the MACD histogram is rising, and the RSI is near oversold. All of those are signs of PLTR bottoming out. But just like DKNG, we don't have any confirmation of a rebound yet. So again, there are two ways to play this. You could buy in now and then set a stop loss at $20, or you could wait for confirmation of a rebound and then buy in. If I were considering options, I would actually consider an option spread that makes money when PLTR trades flat, because that's what it looks like it's going to do in the short term. I would consider either a butterfly spread or an iron condor. Alright, I hope you enjoyed this video and got a lot out of it. Comment down below what you think the market is going to do. And if you're looking for some more immediate help during these volatile times and you want to find a group of people that are just absolutely killing it in the markets, making a ton of money, then I do recommend that you sign up for a Discord called Lucrum Investing. I have a 7-day free trial if you want to check it out. Just go to scottcurry.me/discord. You get your 7-day free trial and you can go check that out and just get some immediate help and answers to your questions, as well as some great plays that are just making a ton of money for the 6,000 plus members that are over there at Lucrum Investing. Also, if you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up for Webull using my link in the description below and deposit just $1, Webull is going to send you 2 free stocks worth up to $2,300. Now, if you're not a US resident or if you're looking to trade OTC penny stocks, then I recommend Interactive Brokers. Interactive Brokers is a great trading platform. They have highly discounted trading throughout the world. They also have cryptocurrency trading starting at just 0.18% buy and sell fees with no bid-ask spreads. Probably one of the best and lowest rates I've ever seen. And both Webull and Interactive Brokers both offer the full pre-market and after hours trading from 4 a.m. until 8 p.m. Eastern Time. And I do want to remind you that I have material connections with both of those, so whenever you sign up for either one, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos. And finally, I want to remind you to hit that like button, subscribe, and follow the page if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.